SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Gold and silver looked like they were getting ready to take off. They've been slammed the past couple of days. What's going on with the stock market? Hitting a couple of days of rough patches. Well, you know that when I want to figure out what's going on with the cycles, I go over to Charles Nenner, David Gurwitz, here with us now. David, how have you been?
Fantastic, Kerry. Always a pleasure to talk to you. How you doing?
Hey, I'm hanging in. So what's with the markets here? What can we look forward to according to the cycles?
Well, it's a lot of landmines out there now.
To say the least. We got wars. We got threats.
I'm going to tell you a quick war story. Hope you don't mind, but you and I are friends, so we
sure.
go to the hoop on war. There's this guy named Putin we might have heard of, right?
Oh, our good buddy Vlad, who doesn't know he's getting played by the Chinese just like the U.S. is.
Well, I don't know about that.
He's getting played.
Okay, whatever. We all have opinions. He's pretty, Anyway, 4 years ago, Charles talked about war cycle. If you Google, and everyone listening should Google 100-year war cycle, and I don't know if you and I have ever discussed this, probably not.
A little bit.
Okay, that if
1914, 2014.
Well, 1812, 1713, 1615, the second decade of every century has had a major war, going back 1,000 years. It's not our research. It's on Google. Just Google 100-year war cycle, right? Charles, not only that, has looked at and studied war cycles going back 3,000 years, and he has said, and you know this, that war cycles were bottoming 2 years ago, and they're up for several years. And he said the way it's going to look, we're going to look back, we're not going to realize it started already. It's funny what you mentioned, the Chinese are playing in. It's all connected. It's not like one player playing anything. We know that anymore. There's nothing one player going on. So 3 years ago, Charles was on another show, I think Neil Cavuto show. And Neil Cavuto is actually how Charles got his business started 30 years ago when he didn't know anything. He came to New York and was watching Neil Cavuto on an early, again, 30, 35 years ago maybe. There were no business shows back then. There was one of the early ones. Neil Cavuto was saying IBM top because of this. And Charles didn't know anything. He was in medical school, who had just discovered the cycle theory based on other things. He said, how do you know why IBM topped? Because Charles says, I don't know why anything happens, but I certainly can't say I know for sure why. And he went down to the New York Library and did top-to-top analysis by hand of IBM from old New York Times. And he did all the cycles, 2 weeks, 5 weeks, 10, just like you see now. And by the way, your listeners should write in and they'll get to see a sample of the work, charlesnenner.com. So he found that. So anyway, he was talking 3 years ago when he was on Cavuto's show about war cycles. And this person from Russia was watching it, okay, the prime minister. And he told somebody to track down this Charles, who they did. Charles went to Russia 3 years ago, never met Mr. Putin. But there's a film that was made, I think it's on our website, it was like a propaganda film showing what Mr. Putin had done for the Russian economy compared to 10, 15 years prior, which is true. It was kind of a mess. And Charles is in that film, talking and overdubbed in Russian, right?
Mm-hmm.
So it's really kind of interesting. We see what's going on now. We're not surprised because, number one, this is a person over there who studies war cycles. He was head of the KGB. Number two, there are cycles that, whether it's him or someone else, there are wars that repeat in patterns, just like stock tops and bottoms and gold, stuff that's very hard for people to accept because they think they have free choice. And we don't. We think there is no free choice, which is a very difficult concept for all of us who live with the age of computers and cell phones and buttons, and we can do what we want, but we tend to repeat them in patterns we don't think we do. So I just wanted to share with you how fascinating it is given the quote-unquote news when you say what's going on with the markets. Again, we, as you know, better than most, think the markets are predetermined by the past repeating patterns. how else could we call the top in gold, the top in Apple, the top in nat gas, and then down and then back up again? As you have seen, we've been calling it up, and you sent me an email, Kerry, correctly talking about anecdotal evidence of nat gas hoarding by certain places, which I found fascinating what you sent me.
And there's also a weather cycle, I think, that kind of goes pretty closely with that war cycle too, and a food cycle that corresponds as well, if I'm not mistaken.
That's correct.
Right, David?
That's correct. Yeah, it's absolutely all these things. Everyone laughs. I don't think everyone laughs. We have thousands of clients. Obviously, they don't all laugh.
I'm not laughing.
I know.
You don't hear me laughing, do you?
You're a fan, so but it's very hard, given the torrent of news, for people to think that what happened 200, 300, 400 years ago is affecting today. And the answer is, well, think about it. If your great-great-great-great-great-grandfather didn't marry your great-great-great-great-grandmother, you wouldn't be here. So obviously something affected back then. But the reality is, according to what Charles came up with, which I have always found and still do to be brilliant and unbelievable, talk about a fan. I'm a fan of the man, what he came up with. Things from the past repeat, and if you pattern them, they're going to repeat. And that's why, to answer your question, to come back in a front way, stocks, we called the bottom in 2009. They haven't been long for 5.25 years. Don't think we called 63 months up. We didn't. So mostly long. The targets have been reached. There's going to be a downturn, but then an up move, and then a downturn, and an up move this year. A lot of volatility. Might wind up the end of the year, by the way, but next year looks very tough, beginning of a multi-year decline, according to us. The dollar, I might as well hit everything now so we can schmooze the rest of the
Sure.
time. The dollar tops the end of the year. Gold, which we'll talk more in, obviously, is bottoming July, which is why this up move, which we call the 1400, we do cycles and target. When they both line up, it's a good trade to either buy long or get out, or sell short, or just go to cash. Silver is the same thing. We think silver will go back to its highs as gold, but not starting till the summer. So that's kind of the big picture. Bonds, we think after 30 years plus of a rally, including possibly going up more for the next several months, you're not going to see rates going much lower than this for the next 2 to 3 decades. And
really?
So that's a bond short, which is something who's used to for the last 30 years. How many times have people ever shorted bonds?
So this war cycle, though,
yeah.
I'm intrigued by that. We talking World War, or how does that work?
Yeah, great question. World War. This is not skirmishes. Iraq doesn't count.
Mm-hmm. So World War III or IV, depending on who you talk to?
I don't know. I call major skirmish. Major, because that's the data that he used to plug it in. And, one of the things we do is we buy old data, from different places going back 800 years, 700 years, not stuff everybody has, and not stuff everybody knows what to do with. So we've been acquiring that for a long, long time. That's how you do economic indicators. People say, well, how can it be if different stocks go into the S&P and the Dow that it's the same thing? And our response is any data series, in theory, is reflecting the overall voting of that particular index, whatever makes it up. Because otherwise, you could always say, how do you predict anything? And that's our attitude. How could someone say, based on earnings, based on this, how can you predict if you don't use at least past performance? How do you predict anything? That's our basic philosophy. You've got to look at patterns from the past. Yeah.
And it's that strong, huh? So we're slaves of the cycle.
Basically, yes. As painful as it may be to hear, but one way to look at it is if you know it, you can accept it. See, Keynes came along at a time when, he basically said, and you saw we wrote this 2-3 weeks ago, that he came along and said, we can influence things. And obviously every politician more or less has to be a Keynesian because he has to justify his position in office. And that's why he's going to want to say to everybody, vote me in, I can do this. I can keep a pump on easing, and that'll affect everything. And the reality is, if cycles show that the market was going to be up for so long, we don't know what's going to cause it, but the certainly you weren't going to get the easing in 2000 or in 2007. You got it starting in 2009. I don't remember exactly the first easing. It was probably, 3 years ago?
Mm-hmm.
I don't remember exactly, but things come along at cycle tops or bottoms that we tend to think is the reason it happened. But our attitude is cycle came first, and then the reason shows up after.
So David, the tapering that the central bank, that the Fed has been repeating this mantra over and over again, is that real or is that imaginary?
Well, I would ask it differently. Even if they do or don't do, will it continue to be the so-called reason that you have, in effect, the equivalent of the Greenspan put, and people are just waiting for the government to either put the gas on the pedal or not? And hedge fund managers have obviously been looking for 5 years, the ones who did well, to keep buying every dip because they just assume the government won't let it go bad. And individuals have not really participated. And that's why the whole idea that there's a frothy top at the moment based on individual participation just isn't there. So that's the reason why we don't think you have such a crash coming now, which a lot of people have said, practice said there's a crash. We don't think. We think there's going to be still strong up amidst a lot of volatility.
Right. So basically things are just going to continue on as they're going until the cycle ends.
Well, that we should talk about next session.
All right. So up next, we're going to talk about how the cycle continues on. We'll talk about oil, gas, gold, silver, where it's all heading. On the Financial Survival Network, we're here with David Gurwitz of Charles Nenner Research.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at NoConstitutionZone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's NoConstitutionZone.com.
And we are back on the Financial Survival Network with David Gurwitz of Charles Nenner Research. So let's go down some of these markets that you cover regularly, bi-weekly on your newsletter. So first, we've got S&P, NASDAQ. What's going on with that? Where do you see it heading?
Okay, first, let me just say we write a update Monday, Wednesday, Friday, and on Sunday we do a chart report of between 10 and 20 charts and a commentary on various things in the global macro space, stocks, bonds, commodities, and currencies all over the world. So your listeners should write in. They get a free month to sample it, and someone will speak to them about the subscription options afterwards.
Yeah, give them your email address, by the way.
Oh, right. It's charlesnenner.com.
Okay.
So go to charlesnenner.com, right, and say they heard David speak with Kerry. Let me read you Monday's research, March 17th, or the 2 days after the Ides of March. And we wrote, again, with the S&P, the weakness continued, and the S&P, Dow, and NASDAQ confirmed a sell signal. However, to go short, you need below a certain level. So we're in this middle range. So the VIX triggered a buy signal. That's the volatility index. So we're out right now and just saying it's been a seesaw. We called it up to this level, which we said last week. Let me take a look and see. I can't remember everything all the time.
Yeah, a lot of markets to remember.
There's a lot of markets. Some people have better memory than me. But we called it up into the 1840s as an upside. Oh, no, sorry. 1870 was the S&P futures upside. We reached it. NASDAQ 3,700, and we had an upside target for the Dow 1677, and then we had a level below all three to cancel that, which we just did. But today we're, up again because that's part of the seesaw we prefer to step out of. We think it's exhausting even if you're on the right side. So that's the stock picture, and the TSX we called it. We called it at 12,000 to go to about 14,000, which it did more or less. And so that's also hitting a top now. So we think it's landmine time now, but not ready to go short yet. And that's the big stock picture. Longer term, it's going to be up and down this year. and then we think down for years. The overall stock picture doesn't mean all stocks will be down, because we think Apple will be up. We think there'll be a bunch of M&A this year. Vodafone was just tip of the iceberg that happened yesterday.
Yeah, what about a stock like Google? Does that keep going up?
That's a good question. We called the top in Google, I think a month ago, saying it is topping, and longer term we have to redo, because that was the last work we did, that it was topping. And as a matter of fact, if you hold on, I'll take a look to see the last time we did Google. There's a lot of stocks in the world, and we cover most of them. But
sure.
Google is we did it January. Until now, that Google skyrocketed. Based on the cycles at top, we expect a correction and close below 1090 is a sell signal. Doesn't mean go short. Just this, we said this in January.
Mm-hmm. It's at 1,200 today.
Yeah. So, yes, but if it closes below 1090, it sells, meaning don't sell it.
Mm-hmm.
We do think there's a correction coming in Google.
Right.
Yeah.
So
unbelievable.
Yeah, unreal. Then we look at our old friends, gold and silver.
Yeah. For gold, we said the top, which was one of the best calls Charles ever made, 1900 2 years ago, and we said it would be coming down with a lot of bounces until the summer, which is exactly what's happened, including this bounce, this tapering. We think 1400 was the target, and we got one more down move. We don't know how far. But the best time, according to us, to buy is the summer, and then it shouldn't have as many bounces down. But it may go a lot further lower. 1100 was always a possibility. We're not saying that's where it will go, but certainly not to load up now. We think it's better in 3 months or 4 months.
Right.
And then it goes back to its highs over the next several years, not like in a week. It's not going to be like that.
Still on a buy signal, though.
Right today, yeah.
Right today, until it closes below 1345 for gold and 2050 for silver.
Right. We called this move of 100 number points.
Yeah. And then we go to our old friend Crude, which it's still staying above 97. So it's still on a buy, huh?
Right.
Or it's on a sell right now, rather.
Crude is on a sell. Let me say the sell signal no close above 100. We expect to see another bounce, but which is a short-term bounce. It stayed above 97. We have a target that shows up in our system of 122.
Mm-hmm.
So what would cause that? Geopolitical.
Obviously.
But it shows up. So now here it goes back to what we discussed in the first section of when we spoke about what's going on in things, whether it's stocks or bonds or commodities or currencies. Is it the news, or is it the cycles, and then the news comes along based on the cycles, which is what we think. So if we see a target of 122, it doesn't mean it's the 100% for sure target, but if it shows up, and if it goes above 103.50 was where it could go to 122, then something's going to cause it. Is it an underlying economic strength and demand? Yeah, you could always argue, cars and population, all the peak oil, but we think it would be probably geopolitical right now.
Okay. And then
so we do have it as a target, but I wouldn't say buy calls right now until we see it go above a certain level.
Sure. Then nat gas, man, that's been the roller coaster of the winter, more than any other commodity out there. Boy, that one went up over 6.
I know.
And then crashed. Parabolic crash.
Right.
So
that's what happened. I remember when it was 12, went to 6. Everyone thought it was going up. Charles said it was going to 2. This is 4 years ago. Went to $1.70. He said, no, I said it was going to $1.70. It went to 2. Again, here's an example of the news. I might have said it on your show before, but the Canadian banks want a lot of the Western Canadian nat gas producers' money. When nat gas was 5, went to 4.50, 3.50. They're sitting in the boardroom of the bank, and they have an underwater loan, just like real estate.
Mm-hmm.
And they forced the nat gas companies to start selling to pay back the loan, drove the price down further. So the news said nat gas companies selling pressure from banks causes price decline, and we, of course, say it's because of cycles. That's an exact example of the news following the cycles, but no one will say this is the cycle that caused it.
Yeah.
But that's how else did we say it was happening? How else would anybody know? It got down to the level. We've called it up to this point. We still think it's going back towards 2, believe it or not.
Is that right?
Yeah.
There's so much shut-in capacity that came back on.
You're smarter than me in this regard in a lot of things, Kerry, but one is that could be the reason. But we don't know what the reason is. We just don't know when it'll show up. And once we get to this high, and again, I recommend you listeners to watch our research to see when it'll happen. I don't know myself. But when we get there, we're going to say we're going to looking for nat gas to retest its lows.
Hey, then we go on to U.S. bonds. Man, you've been spot on with these, like so spot on. It's frightening.
I agree.
I agree. No one called them like you guys.
No, I know.
No.
I know. And then we still think. Let me read what we wrote for bonds yesterday as well. Cycles top for bond prices. We don't trust the up move, but they're still in a buy signal as long as no closes below the following levels for the 30 to 10 and TLT. Yesterday we sent out charts. We didn't do it on Sunday. Mm-hmm. And the short-term bond price cycles are close to a high again. Dutch bond yields are close to a low based on cycles. The Dutch down.
Yeah.
So we still think bonds has a shot to keep going up through the summer, but you ain't going to see rates much lower.
Yep.
For the next 30 years. There may be one more move up because, the cycles show it. But, if you start to think always bonds or stocks have to go in opposite directions, I've said this before, 1980, if you bought stocks for 30 years, you bought it at 1,000 a Dow, it's up to 14 or 15, you're up 15 times. If you bought bonds for 30-year hold, rates are 18%, they're down to 2 and change now, you made a great win. So they went in the same direction. If you did the same trade in 2000, 2007, 1987, you had different results. Stock market came down in 87, came down in 2000, came down in 2007, whereas bonds just continued to go up. Mm-hmm. So there are times bonds go straight with bonds. With stocks, there are times they go opposite.
Yeah.
And we think going forward, they're both going to go down.
Yep. And then quickly, currencies, that's been a riddle there, hasn't it?
Yes. We called euro for 2 years to be strong, which it has. We think the dollar will top, the U.S. dollar top at the end of the year, if not the third quarter, and begin a multi-year descent. So even if the Dow, which we think is heading towards 5,000, I know Charles said it was going to be earlier, and he changed his opinion. Of course, people come after him saying, you said this. He was wrong, but he changed his opinion a few months later. We think the Dow will be heading a lot further than this now by the end of the decade, and then the decade of the 20s goes way up for 10 years, way past where it is now. But if the dollar's half the value, it'll only be in 50% dollar terms.
Right.
So let's say the Dow goes 60, 80,000, which we see as a possibility, believe it or not, after the down move. Well, it'll only be worth 40, according to a dollar that's worth half. And if you factor in the time difference, it isn't such a great move. But nonetheless, if the Dow goes to 5, 6, 7,000 by the end of the decade and moves up to 60, 70,000 in the decade of the 20s, which we see as a possibility, that's a 10-time move.
And the reason I've had this debate, one potential scenario is a new energy source becoming prevalent. Just speculation, but that would kind of make sense, and that would really fit in with the cycles.
Well, how do you see that? Because we talk about it, but because this was not on the cards 2, 3, 5 years ago.
Really wasn't. But
no.
If you have a new energy source, that would send everything. That would change the dynamics of society, of the stock market for sure, because that would be the biggest tax cut, in quotes, that you could imagine, where we really had fusion come in, or solar energy, or wind, or geothermal, or some type of new energy comes into play and totally changes the dynamics of living on Earth, really.
Right.
Think about it.
I agree. No, I agree. That would, and it makes sense. According to what we see, at some point you'll see really cheap fuel prices, just not tomorrow.
Yeah, at 2020. And
right.
That's what that chart makes me think, we got to go. We got to go now, David. Just tell us again where we get the sample on your newsletter, and I think it's
Anyone
must reading.
CharlesNenner.com, write into hit contact us button and say you heard David speak to Kerry, and you get on the list right away in a free month, and someone will contact you shortly about the different subscription options.
And, of course, just go over to financialsurvivalnetwork.com, click the link, you'll get right in there. And don't forget our newsletter, Dirty Money, and we mean literally dirty money. That's the subject of this week's newsletter. David, always a pleasure. Thanks so much for taking time from your busy day and speaking with us. It's always appreciated.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.